Good evening, everyone, and welcome. The Federal Reserve is in no rush to raise interest rates. The central bank held rates steady for the second straight meeting and said it would increase them more gradually than previously forecast. Policymakers say soft global growth and financial market volatility pose risks to their economic outlook. This even as some recent economic data shows some firming. Just this morning, we learned that core consumer prices, which exclude food and energy, rose 0.3% last month. That was more than expected. And the notion that the Fed will delay some rate increases sent stocks higher and bond yields lower. The Dow Jones Industrial Average gained 74 points to 17,325. The Nasdaq added 35, and the S&P 500 rose 11 to its highest level this year. Steve Liesman reports on why the Fed seems uncertain about the economic recovery.
A dovish Federal Reserve kept interest rates unchanged at its March meeting and suggested it would be very cautious about future rate hikes. In fact, the Fed slashed the number of hikes it forecast this year, with the average member of the rate-setting Federal Open Market Committee now seeing just 2 rate hikes this year, down from 4. The Fed gave a fairly upbeat assessment of the U.S. economy and jobs, but was clearly concerned about recent global economic weakness.
You have seen a shift this time in most participants' assessments of the appropriate path for policy. And as I tried to indicate, I think that largely reflects a somewhat slower projected path for global growth.
But Yellen did not rule out the chance of future rate hikes, underscoring that Fed officials have forecast 2 more rate rises this year and said every meeting, including the one in April, is live.
Most participants do continue to envision that if economic developments unfold as they expect, that further increases in the federal funds rate will prove appropriate over time, and that the pace will be gradual.
Of course, Yellen could not escape a question on the heated presidential election and whether it had any influence on the Fed and Federal Reserve interest rate policy.
We are a nonpartisan, independent institution devoted to pursuing our congressionally mandated objectives, and I have never seen political views in any way influence the policy judgments that are made inside the Federal Reserve.
With the Fed not hiking after a strong employment report and 2 months of rising inflation, it remains unclear what it will take for the Fed to raise rates again. The suggestion from Yellen today was if she was less concerned about global growth and had more confidence in rising U.S. jobs and inflation. For Nightly Business Report, I'm Steve Liesman in Washington.